Welcome back. In today's video, Wall Street now controls all of the cryptocurrency universe. We're going to be discussing why I believe this. We're going to show you some of the topics that potentially kind of back this theory and thesis up, and whether this is bullish or bearish for the investments that we potentially are going to or already have made in the cryptocurrency world. As always, nothing I say on this channel is financial advice, but I'd appreciate if you guys give the video a free thumbs up, hit that subscribe button. We upload since 2018 quite often, so I would definitely recommend hitting the subscribe button if you want to help support the channel by becoming a channel member. Click the join button to learn more down below right here on YouTube. We're going to be starting right here because this is kind of the point where I realized that my thesis about Wall Street wanting to control crypto being true, right? Not just Wall Street, but the banks, right? Grayscale's CEO has now stepped down and a Goldman Sachs executive is going to be taking his place. Now, granted, maybe this has nothing to do with the actual takeover, right? Michael Sonachin has been the CEO of Grayscale for 10 years. I'm sure that he's exhausted, right? And he wants to kind of take some time to himself. But the bigger story is who's taking over. He's going to be succeeded by a Goldman Sachs global head of strategy for the asset and wealth management division. He also previously worked as in roles related to strategy, mergers and acquisitions, and investor relations at BlackRock, Oppenheimer Funds, and Invesco. Now he's going to be taking the helm of Grayscale on August 15th. So just a few months from when I'm recording this video. But as I've explained, right, Wall Street has been buying the Bitcoin ETFs. They have been consolidating, in a sense, the Bitcoin mining companies, right? We saw, I think it was Hut 8 Mining just became a US-based company through a merger. They used to be a Canadian company. We've seen Riot Platforms, Marathon Digital, Iris Energy, TerraWolf. They've grown at a very rapid pace, and they've gotten a lot of pretty big names on their board of directors, and also not just like people from the defense industry are on the board of directors for some of these Bitcoin mining companies. So when you see all of that, you're like, okay, well, why are they strategizing in this way? In my view, this is because Wall Street and the banks, as much as Jamie Dimon from JP Morgan says that Bitcoin is BS and it's manipulated and it's not real money and all of this, right? Remember, JP Morgan is the only bank and the first bank to bank Coinbase and Gemini, the two largest regulated crypto exchanges in the United States. They've been banking them for years. And what we've discussed is because they're the bank that the money flows through to get in and out of Coinbase or Gemini, they know when the markets are going to go up, when the markets are going to go down, how much money's flowing in. And they use that, right? They're not stupid. They're like, okay, well, this is all happening. Like, how do we get some of this money, right? And so some of it was from the Grayscale, from the Bitcoin ETFs. And we've seen, BlackRock, when I'm recording this video, $17+ billion in Bitcoin, Fidelity, $9.9 billion. And then what we started to see, right? So we had the banks were watching the flows of money. Then we saw the Bitcoin mining companies kind of consolidating and really growing at a very rapid pace in the United States. Then we saw all of these Bitcoin ETFs popping up everywhere, right? And they're in control, right? They are involved in crypto at a very high level, and they're investing in crypto at a very high level, right? The previous cycle, a lot of these pension funds, hedge funds, and all of this, they were all investing in FTX, right? FTX, they had zero Bitcoin, right, when they went bankrupt, zero. And so obviously that wasn't a safe investment, but people thought investing in a company was safer than investing in this new form of currency. Well, that is all changing, and it's already changed. People just don't necessarily realize it. But now Grayscale is going to be controlled and run by the banks, by a banker, right? And it's not just that is kind of letting me know there's a big appetite for crypto, and there's a big appetite for the control of crypto. State of Wisconsin buys nearly $100 million worth of BlackRock spot ETF. The state's investment board bought 94,562 shares of BlackRock's IBIT trust in the first quarter of the year. Now, remember what we also talked about. These Bitcoin ETFs launching at the time that they did was perfect timing because it was one before the Bitcoin halving. So this was the ability of Wall Street investors to get in a regulated product before the Bitcoin halving. Two, most of these Bitcoin ETF companies, they were buying Bitcoin from these bankrupt lenders like Genesis Trading. Because think about it, if Grayscale were to just start selling their Bitcoin, and by the way, Grayscale has already shrunk their Bitcoin holdings through sales by about 300,000 Bitcoin. So if they did this and there was no ETF issuers buying the Bitcoin on the other end, the market would plummet. And so they weren't going to allow that to happen. So we saw these Bitcoin ETF issuers were effectively buying the Bitcoin from what Grayscale was selling, what these bankrupt crypto exchanges were selling. So effectively, Wall Street bailed out the everyday investor. And now this is all pre-halving. That state of Wisconsin is buying $100 million worth of Bitcoin ETF. This tells me that they have been waiting for a better investment in Bitcoin. They could have bought Bitcoin, they didn't. So how many other funds, pension funds, retirement funds, self-sovereign funds, state sovereign wealth fund, like how many of these funds are just waiting to buy it? And some of them, they're probably waiting to hear, oh wait, state of Wisconsin pension fund, their investment board bought $100 million with BlackRock's Bitcoin ETF. So maybe this is like where we need to allocate some of our funds. This is where I think we're going to see the major moves in the market when that starts to happen. Because this initial flow of money into the Bitcoin ETFs, again, a lot of it was just bailout. It was just moving from one entity to another entity, from Celsius to BlackRock or from Grayscale to Fidelity. There was no actual increased demand per se. People think that there was, but there wasn't, because there was also a huge supply that needed to be dumped on the market. And so that's why I think that we've seen the prices stable into the Bitcoin halving, where we haven't seen that previously in Bitcoin cycles. But I believe that we are going to start seeing more and more companies and funds and hedge funds buying into Bitcoin and these Bitcoin ETFs, right? They want the exposure to Bitcoin, but they don't want to custody the Bitcoin. They don't want to hold the Bitcoin. They don't want to do what MicroStrategy is doing, right? Just holding BlackRock. Let BlackRock do everything, right? Now, whether you agree with that or not, that's a whole different story. You know, do you want everything to work exactly as planned, or do you want to get rich, right? I mean, if you want to get rich, you should be cheering on the fact that BlackRock created a Bitcoin ETF, and therefore state of Wisconsin and other investment funds and boards, they can invest in this asset class, right? And it's not just BlackRock, it's not just states that are buying it. Steve Cohen's Point72 Ventures is also an owner of Bitcoin via spot ETFs. Roughly 13 out of the 25 biggest US-based hedge funds held the spot Bitcoin ETFs at the end of March, according to data from Bitcoin brokerage firm River. And you can actually see this if you go to institutional holdings of whatever stock or whatever. You can actually see the top, 50 maybe holders of these funds, right? So Point72, the $34 billion hedge fund, a billionaire and owner of the New York Mets, Steve Cohen, held $77.5 million of Fidelity's Bitcoin ETF at the close of the first quarter. Again, before the Bitcoin halving. It's not just Point72, it's also Millennium Management. They held around $2 billion worth of shares in at least 4 Bitcoin ETFs. We talked about state of Wisconsin, the Bank of Montreal as well. What else does it say here? But basically, you guys kind of get the point. Like, a lot of these companies and a lot of these funds, they've wanted to invest in crypto. They just haven't had the opportunity to do it. But what does this all mean, right? Well, if we look at what BlackRock has already done, I'm just using BlackRock because this is the largest of the Bitcoin ETFs besides Grayscale. We've kind of already talked about Grayscale. Bankers are now going to be the CEO of it, right? But if we look at BlackRock, when I say Wall Street is in control, I literally mean Wall Street is in control. There's a lot of people who don't believe that we're going to have any major cycles like we've had previously anymore. I do think the hyperbolic growth in crypto is pretty much done. We're still going to have major growth, but are we going to see coins go from $1 to $1,000 in one cycle? Highly unlikely, right? Highly unlikely. And here's why. Wall Street controls everything. So how do we quantify that? How do we know that Wall Street is in control? Well, if we look at just what happened in the beginning of May, BlackRock reports their first outflows as Bitcoin ETFs shrink 20% since March. So from March to May, we saw a reduction in the holdings of all the ETFs, not just BlackRock. Now, if we rewind a few years ago, when I think it was SpaceX purchased Bitcoin, they purchased Bitcoin in December or January of whatever year it was. And then a few months later, I think it was also May or April, SpaceX sold some of their Bitcoin. And Elon Musk said, we're doing this to test the liquidity in the market. And I agree that that's probably what he was doing, but I'm sure they were also seeing what impact that will have on the market. Same thing like I just told you, if Grayscale were to sell 300,000 Bitcoin over the last 6 months, 10 months, and there were no Bitcoin ETFs approved, who would be buying all that Bitcoin? They probably wouldn't even be able to sell it because the price would just keep plummeting. So that is an indicator of the liquidity in the market. And what we see here is BlackRock first reported outflow was in May, right? Beginning of May, May 2 is when this report was written. So if we look at the IBIT, and also the blue line is the IBIT, which is BlackRock's Bitcoin ETF. The yellow is the Bitcoin price, okay? So in the middle of March, right here, through the beginning of May, right here, you saw a reduction in the Bitcoin ETFs. And what happened to the price of Bitcoin during that time frame? The price of Bitcoin went down. The yellow is, let's actually, I'm gonna have to pull this up on a separate page because I wanna show you guys from, this is the IBIT, BlackRock's ETF. From the top in March to that May 2, the bottom of the outflows, I should say, there was a 23% reduction in the price of the Bitcoin ETF. Now, if we look at Bitcoin during the same period, from the middle of March till May 2, you can see a 20% reduction in the price of Bitcoin. So this is a very highly correlated activity. And so this goes in line with my thesis. Hold on. I wanted to pull that chart up again. We're going to compare it to Bitcoin. This goes with my thesis that Wall Street is in control, right? The BlackRock ETF is 100% correlated with Bitcoin price moves. But one could argue that it's actually BlackRock's Bitcoin trust that is determining where the Bitcoin price is going. And so there's a very large potential that BlackRock is actually here testing the waters, right? They did almost the same exact thing that SpaceX did. They bought at the beginning of the year, and then somewhat in this like April, May timeframe, they started selling. And then we saw I think they just did nothing, or maybe they bought back. I don't remember what SpaceX did, but I'm just using that as an example. I think the same thing is happening here with the ETF issuers, specifically BlackRock. I think that they're testing the market to see if we sell off just a little bit, maybe a few $100 million. And for us, that's a lot, right? But if you look at their overall holdings, 10% would be $1.7 billion. So 170 million would be 1%. So if they just sell 1% of the trust, how would that impact the Bitcoin price? How would that impact the Bitcoin market? Now, I don't know the exact number of how much Bitcoin they sold. I'm sure it can be looked up, but it's definitely in the range of close to $1 billion over the course of a week or two of sell-offs across all the Bitcoin ETFs. And then it stopped, and then we have inflows again, and the price starts going up. So when I say Wall Street is in control, like I literally believe that Wall Street is in control of these markets now. And I think this was part of the part of the point, right? That they don't want the prices to be moving extremely high. They don't want it to move at the pace that we see. And you may say, but Cryptoviser, there's a limited supply of Bitcoin. So technically, they can't really control the price, even though they can. But this brings us to this. Tyler, who's a trader on X, he said BlackRock can take as much Bitcoin as they want from Coinbase, and the transaction is recorded off chain. I'd like to see all of their ETF wallets. And he posted this from, I believe this is the SEC documents about how BlackRock's fund works with Coinbase. And without reading through all of this in depth, you guys can pause the video here if you want to read it. Effectively, it says that transactions are done off chain. So, and that there's some kind of credit balance. So for instance, let's say today, somebody sells $1 million worth of the BlackRock's ETF. Technically, BlackRock should be redeeming a share for Bitcoin and then liquidating the Bitcoin into cash. But effectively, what this is stating here and what Tyler is pointing out is that this is not how it actually occurs. That what effectively can occur is that if I sell $1 million of BlackRock's ETF, they'll give me the money and they hold those coins as kind of like a credit, right? They just keep it in to the side because tomorrow maybe somebody's going to buy $1 million worth of the BlackRock ETF, or maybe another issuer, maybe Fidelity, somebody's going to buy $1 million. So instead of processing all those transactions on chain and letting the market be able to, look into these wallets and see the flows, Coinbase will take that million, fund the whoever's selling it, give them $1 million, right? And then maybe tomorrow or the next day, somebody buys $1 million in other ETFs. And so they fund that with this credit that they have for those Bitcoin. It sounds complicated, but it's really not. It's kind of borrowing and lending effectively. And if you think about going back to the Grayscale's thing, Grayscale never published their wallets ever, right? I think maybe more recently they did, maybe after FTX they did, but I'm pretty sure that they have never released their wallet addresses. And they've said that they did that for security purposes, which obviously makes a little bit of sense. Although some people say, well, a public key, there's no security issue if you know the public key or whatever. It doesn't matter. But why wouldn't they provide the exact wallet address? And BlackRock isn't doing it. Bitwise does. Bitwise does have their wallet so you can see proof of funds. But why is Grayscale, why is BlackRock not doing it? Maybe they're doing it because a lot of these transactions are being done off chain. And so if they're being done off chain, BlackRock, if they sell, let's say $1 million, right? Or they sell off, 20% of their fund, like what we saw recently in March to May, they know the market's going to drop, and Coinbase may not allow the market to drop for maybe 30 days or 20 days or 15 days because they have that sale, but they haven't executed that sale on chain, right? And so effectively, BlackRock can crash the market, know ahead of time that they're going to crash the market, and then also know ahead of time when they're going to pump the market back up by buying back. So this is a very interesting concept that he's pointing out here. And effectively, he said, Tyler said, this means that BlackRock, can borrow Bitcoin from Coinbase to short Bitcoin, and they're not required to show any proof that they hold 1-to-1. There's also a 2 to 30 day settlement period. All settlements are done in cash. So yeah, I mean, we know what the banks do, right? They don't have 1-to-1. If you go to the bank and you want your whatever amount of money you have in the bank, they may have the money, but if everybody goes to the bank and asks for their money, they don't have it. They don't have the money. And so for us to think that they're just going to get into Bitcoin and crypto and, not do that same thing, I mean, that would be foolish, right? Especially if they're controlling where the market is. Now, what does this mean for you and I, right? What does this mean for the markets? Honestly, I don't think it means that much. I think it's important that we're aware of the control that Wall Street has in the markets, because that way when you hear people say, oh, but Cryptoviser, Bitcoin is completely decentralized. Like, we know that that's clearly not true, because most of the Bitcoin mining companies are in the US. A large portion of the holdings are in the US or in US-based entities like BlackRock, Fidelity, Grayscale. And so when people say, "Oh, it's completely decentralized," oh, BlackRock can't control the market. Well, that may be somewhat true, but it's not 100% true. And it also gives us better insight into understanding that I believe the volatility in the markets and the strength of that volatility is going to diminish over time. And this happens in almost every market where you'll see major swings where Bitcoin can go from 10,000 to 50,000 overnight. That's a 5x. And we see that happening in stocks as well. So it's not completely out of the realm, but you don't see it as much in products that are widely held by Wall Street, widely traded by Wall Street funds. And so understanding that, this can level set your own expectations about what you want to make in the market. So can Bitcoin go to $1 million in 2024, 2025? Absolutely. Do I think it's going to hit 1 million? No. No. I don't even think we're going to hit $500,000. Now, if BlackRock and Wall Street weren't involved, maybe we would. But at the same time, maybe we wouldn't, especially if all of these bankrupt lenders and bankrupt exchanges had to sell off all of this Bitcoin, and Grayscale sold off 300,000 Bitcoin in the last few months. So understanding this can help you understand kind of where the markets are, where the markets are going, and where to position your portfolios in understanding, and also when to take profit, because that's something that a lot of people are not thinking about right now. We're in the bull market. If you don't have exit prices that you're ready to sell at, what are you doing, right? And so people who are saying, well, Bitcoin's going to hit $1 million, I'm not selling till 1 million, we're going to hit it in the next year. You and I know that's probably not going to happen. It could, but the chances are highly unlikely because Wall Street won't let that happen. Because if Bitcoin started to hit like 500,000, all BlackRock, all Fidelity, Grayscale, all they got to do is sell off a small portion of that Bitcoin in their fund, and it's going to crater the price, and then everyone's going to get panicked, and then other people are going to sell, and then people are going to start panic selling. Granted, there will be buyers on the other end, but at what price? And would it be enough? It's a good question. I guess we're going to see in the next few years before the 2026 bear market. I think early 2026 is when we're going to start to see the rotation into the bear market, but we will see. As always, make sure you guys do your own research. Nothing I say is financial advice. We're just covering what's happening in the news, what's happening in the financial markets, and giving you guys our breakdown of where this is all going. Let me know what highest price you think that Bitcoin's going to hit in 2024, 2025. Don't forget, before you leave, to give the video a thumbs up, hit that subscribe button if you're not already a subscriber. We upload quite often since 2018. See you guys tomorrow. Invest responsibly. Do your own research, and crypto on.